And more from German Chancellor Merz says he is sceptical about new EU debt instruments. Surrounding UK and EU relations, FT reporting that UK and EU are split over a youth mobility deal, according to negotiating documents being cited by the FT. And German Chancellor Merz says EU fiscal rules could be softened for defence.
Good afternoon and good morning. How's everyone doing today? How's everyone doing this month? It's been about a month. Been since last month since I streamed. Gotta get my microphone set here. Here we go. Oh my goodness. Oh my goodness. Oh my goodness. Good morning. Good morning. Good morning. Good afternoon. Good afternoon, everybody. What's up, Chris? What's up, nobody? What's up, John? What's up, Just No? What's up, DD and Nova? What's up? Hope everyone's doing well. We got Jerome Powell here. Press conference in about an hour. We get a Fed interest rate decision in about 30 minutes. I'm sure it's going to move some markets. Or the market's going to have its initial reaction, and then really tomorrow will be when the market most likely digests what's to come. We're going to see what's going on here in the markets. Sold 70 shares of Google at 8:30 EDT based on the last two podcasts. Sold it. What did I say about selling Google? Today I bought Google. Sheesh, I don't remember. John, I'm not too sure. Maybe because I was talking about a pullback in the markets. Maybe that's where. Is that what you're talking about? Most likely. What's up, Savage? What's up, Jake? What's up, Skittles? What's up, Trader Jens 567? Chris, everybody out here on Twitch too. All the 10 peeps out there on Twitch-a-roonies. All right. We're looking at NQ. Right now, over here on the right-hand side of my screen, S&P 500 is right over here. NQ is right over here. Got a couple of little volume-weighted average prices up on the screen. One of them is yesterday's volume-weighted average price, which we're currently below. That middle line, that yellow line right there that you see, it's actually just where we opened price today. So absolutely nothing has happened. But if you zoom out a little bit, you're like, oh my goodness, we got all types of volatility. So a lot of intraday volatility back and forth. Ultimately, though, where are we? Right where we opened within the first 30 seconds of the market. Right there. Pull back on the part and three others. Oh, okay, cool. Now, John, just so you know, I actually took a position in Google. I can walk you guys through that, but let's just hop into Google right now because Google fell hard, right? Google made this massive flush today based off on some news that I didn't even really dive into. I think Apple was saying something and I don't know, whatever. Doesn't really matter to me right now at this point. But it was a very substantial hit, right? So if I go over to you can see this already on my charts. So we saw this just massive range candle, well excessive of any other ATR candle that we've seen all year. So this is one of the largest single day moves range-wise, right, that we've seen here in the price of Google. And we came down back into this 150 kind of zone here. If I zoom out and look at the weekly time frame, you can see we've actually held as resistance here. Resistance, it's held it as support. We're kind of just back in that chop range. And what I like to do with these type of moves here, which you probably saw me post about it. If you're all in the Discord, you probably saw me post about it a couple of times, which reminds me, I have to actually tell people on X that I'm live now. Oops, forgot to do that. Forgot to post it out on the X. But when you see these type of like just very aggressive type moves to the downside, I like to buy into that for a quick bounce trade. It's called fading the move here. So in short, you know, what do I look for when this happens? Maybe you draw a trend line and then you look for the trend line to eventually break. I typically like to just scale in really small. And then if it continues to sell off, I'll try to scale it in. So I was paying attention to this lower monthly expected move. I still think it's possible that we get down there. So I started scaling in a little bit, and then we started moving up higher. And I was looking to scale basically down into and around this range for the final scale. And then we bounced a little bit, so I already sold a little bit into it, and now I'm hoping that we can actually come back in a little bit so I can rebuild up the position. So I've been just trading small amounts to kind of just scale around that. From a day trading perspective, okay, so let me reiterate this. There's two ways that I'm looking at this. From a very short swing trade perspective, from like 1 to 5 days, probably not that long. And then an intraday perspective. The intraday perspective, I go a little bit heavier, and that's maybe to build the capital for holding it overnight and for a swing trade. So that's what I did today. So I'm up on the position from a day trading perspective. From a swing trading perspective, I'm still kind of waiting on for like a larger bounce. Now, where can that potentially bounce to? I know people, want to know that. Well, I was looking at this low over here, which is in confluence with the week-to-date volume-weighted average price and the daily. You know, if I were to on this break of news right here, let's do an anchor volume-weighted average price right to that. It's right here at that 2 standard deviation weekly move. So we're outside of the 2 standard deviation weekly expected move. We came into basically a 3 standard deviation move, which is outsized move, and I like to fade those type of moves. So I have a little position here. I'm up on the day from a day trade perspective, building, maybe the capital for a swing trade, and hopefully, I can build a little bit better for a quicker bounce. But it ultimately depends on how it gets down to these ranges, right? So if you see a strong move like this, like it's going to bounce. Where it bounces to, I don't know, but I like to see the higher low, and then maybe do something like that. But I don't want it to do this, right? Like I'm not interested really at that point, other than maybe watching if it like breaks the volume weighted average prices and then starts moving through. I like when I fade trade, I want a strong move for basically straight down into some very interesting levels and outside of some of the bigger expected moves, and then I'll fade it. So we'll see how that one plays out. Let me figure out my little volume thing here. I don't like that in my ear. Give me a second. Does anybody use Safari for search? I never do. I don't really know. My audio is all weird. Give me a moment. Okay, that's fine. Is that super
And just
loud
making
right
aware
now?
of some commentary from the Pakistan Defence Minister, says they'll only hit military targets, not civilian, in retaliation.
Give me a second. Okay, no, it's quiet now. It was like loud in my ear. The volume mixer is just not working here. I don't know. Very weird. Okay. So we got about 20 minutes left here. So that's Google, right? Google saw some sell side. Now we're seeing a little bit of a bounce. We'll see where that goes. God, why is that in my ear? It's doing it again. My goodness. Okay. Whatever. What's up, Tony? What's up, comrade? Giancarlo, what's up? Giancarlo knows me. I was using GGLL. Yeah, so I was actually I'm not trading Google itself because I like to have capital available. I like to use sometimes the leverage products, especially if it's shorter term, Giancarlo. So I did use GGLL, but I also just be mindful that I'm not going larger position because it's leverage. It allows me to put in less money and get the same results because it's 2x, right? Do I think BR can be a good play after earnings? If earnings were good, yes. If earnings were bad, I don't touch it. I just let it go. We can pull it up because that was a great looking chart. I don't know what it looks like at the moment. No, yeah. So earnings came. It was great looking, but yeah, I don't like to. That's the thing. I don't like to issue new positions into earnings for these reasons. So, you know, if this was a bullish looking chart, right? If this was a green candle and we were like this, I would say yes, because you can potentially get follow through and then you get these consolidations. And I love to trade those for continuations. Here, we had a bearish breakdown and it doesn't mean that it can't recoup. But now if you get a pullback, right, it could be like this, right? And then potentially break further. I'm just not a fan of that. So I just don't bother. He don't bother. Okay, let's take a look at just what's going on here at the market. So if you follow me on, that's what I forgot to do. I forgot to post my live stream on Twitter. I'm all over the place today. Let me share this.
I'm making aware of some commentary here from JP Morgan executive. Does note dollar had become a crowded trade.
What's become a... You know what's funny? I got this note from JP Morgan yesterday on May 6th. And the note was exactly what we've been talking about these last few videos. It was pretty funny. About the CTA positioning and so forth. And then it included the whole, we have some big news or big announcement or whatever coming that Trump mentioned. And who knows? I mean, I don't know what that's going to be around. But I don't know. Like the last time he said something like, "This is a great time to buy," the market had one of its like largest moves intraday ever. One of them, right? So now this big announcement, it's definitely going to be in the back of traders' head like, dude, are we about to see this market just explode again? Or is it going to be more muted? Or is it going to be the opposite, right? Like that can't leave traders' head. So I'm looking at SPY right now, and we're just underneath the inclining 5-day moving average. Okay, so it's a time to be a little bit cautionary right here. Where are we in relation to a couple VWAPs? The week-to-date volume weighted average price was the one on Twitter that I posted about. That I said that's the resistance to watch, meaning not to short it here necessarily, right? I said that as we were heading into this, not necessarily to short it, but that's the area that the bulls need to reclaim. So if you're bullish, you do want to be above that week to date volume weighted average price. You can see we came up to it, rejected. We came up to it, kind of we're rejecting from that area. And price action here is just getting rather tight, right? We're compressing here. So we're probably going to see an expansionary move in the near future. Now we're below where we started for the week to date, so we're down a little bit. And the last video I think that we talked about was key levels that I was zooming in on or honing in on, and that was me to start S&P 500 positions more kind of towards down here, and not like a big position, right? At all. I'm looking for the starter of building into a higher low position, and I could show you again if we pull up the SPY. I drew these out somewhere, I can't remember, but this right here was the first follow through day, and this is the first kind of official higher low here. So I'm really kind of just bullish above this area, but I would prefer to see price come in a bit and then potentially come in a bit more to build into a position. And the thing is, like, oh, but what if you're wrong? I don't care for an S&P 500 position, because what am I? We take out this low, it's 8%, 9%. To me, it's not like my whole portfolio is going in it all at once. That would be still an opportunity. And the reason why I say that is because if we retest the lows, we're back down to 21%, right? So what's really going to shake me out of that? I mean, what, minus 50%? Okay, like even so, if I'm building slowly into a position, those right there are still opportunities. So my hope here is that we can get some, more consolidation and or a steeper pullback so I can build into positions. But as we remain kind of near that gamma neutral line, as we remain near that inclining 5-day moving average, I'm still looking at adding exposure in the names, in various names that are showing relative strength in the relative strength versus the S&P 500. We can go over some of those names here too. I think it's going to be tax cuts. Oh, that's a good thought there, actually, because he said historic good news for everyone, not related to tariffs. Yeah, you're probably that's a great guess. Yeah, I like that. Do I think I'll make some trades live today? Yeah, I might. It's probably going to be low-key type trades, maybe an MNQ contract when volatility picks up. I did some of my trading today already, and I mean, it's not like I did
just want to be aware of the critical footing.
I'm green.
Russia has never been against the ceasefire in Ukraine. That's according to Russian press.
So I want to kind of keep it that way for today. And because I took some heat today, I took some heat on this move. Where is it? On NQ, I took some heat on this. But I didn't enter like here or here or here. I entered actually down here. And then I scaled it a bit for like a few MNQ contracts. And it kind of kept on going down. And I was like, gosh. So I ended up selling it on this pop-up to here, which ended up being green on the day. But it was just too choppy for me. And then when we started breaking this, I scaled a little bit because this was the high for the day volume weighted average price. So as we came up here, I was like, I'll go ahead and scale in to see if we move more up to break even on the day or potentially yesterday's VWAP.
President Xi,
and I caught a little bit of that.
Do an exceptional job.
On an MNQ
US envoy to China to handle consequential and complex issues, just via Bloomberg.
So what did I do today? $123 on one of the accounts over 5 accounts, right? And then $145 on one of the other accounts times 5.
And further here from President Trump does not know on tariff exemptions. Trump does not know on tariff exemptions, and they will take a look at them.
But if you just take one MNQ or 2 MNQ, you can wipe that out in like the matter of moments when volatility comes back. Let's take a look at some of the 0 dates. Let's look at market net flow for the day. Market net flow is actually bearish right here. We have the red line above the green line. The green line's kind of sloping up, and we do have red convergence. Overall, rather choppy here. Rather choppy, so it's a little bearish leaning, but we're rather neutral. So when it's bearish, right, it doesn't mean that we're going to have a trend day. Just like if it's bullish, it doesn't mean a trend day. But it's kind of hard for the market to progressively go higher if it remains bearish, right? So the last time we saw this, I was trending bearish, and someone was like, how's the market not going up? And I looked at the market, I'm like, the market's flat. the market's not going up, it's not going down, it's just choppy, it's flat. So I've seen that, in similar situations. So you always want to use this as just a tool to be on the right side of trade, but just understand that you still need to, to manage risk as you see fit. If we go into the 0-date levels for the today, we got a little bit of dispersion here, but the main area 56.25 and then below us at 5600. To start the day, we had 5700 and then 5540. Those were the two larger levels, and we've been trading kind of well within that today. Kind of just right there in the middle. So let me see here. 5700 would still be here, and that's still in size, and that could still be in play. And then the 5540 level, is over here. So we as we've been trading, there's more focus right here, but these levels are still kind of the outset larger levels here on the 0 DTE S&P 500. So I think that's kind of our range today. And if that's our range, it's very likely to actually maybe go and tag one of those if the market likes or dislikes what the Fed has to say. So my thought here is if I was going to trade this, I'd be looking at these levels specifically. And, if I'm bullish, maybe I'll be looking at the tick chart, and I'll try to start off in a position on, some very frothy readings. If we can get like, fade to move down, if we get like minus 1200 to 1000, I'm not really interested in fading the market from a short perspective.
And in 10 minutes time at the top of the hour, we do get the latest Federal Reserve rate decision, followed by Chair Powell's press conference 30 minutes later. The central bank is widely expected to keep rates unchanged at 4.25 to 4.5%, and this was even further supported after the stronger than expected April jobs report last Friday. According to Refinitiv money market pricing, markets currently assign just a 2% probability of a 25 basis point reduction at this meeting, with 75 basis points of easing price through year end. At the confab and Powell's presser, the focus will continue to reside on commentary of the tariff impacts and the guidance the central bank has to offer. Nonetheless, the Fed is very likely to reiterate its wait-and-see approach to see Trump's tariffs filter through into the hard data if it does so, and help the Fed decide what to do next. In wake of the solid US jobs report last Friday, both Goldman and Barclays pushed back their rate cut calls to July from June. Regarding the statement, JP Morgan expects no substantive change and say the reason for no change in policy is clear from Fed communications and even after Liberation Day, as Fed speakers have pointed to the virtues of waiting to act. JPM also expects no dissent to this decision, and while Governor Waller has become more dovish, they argue his recent remarks haven't made the case for preemptive policy easing. Although do be aware, Morgan Stanley does expect the Fed to downgrade their assessment of economic activity. And just moving away from this quickly, going back to President Trump does note not open to pulling back 145% tariffs. Trump there notes not open to pulling back 145% tariffs.
Getting some movement here in the markets.
And apologies for that brief interruption on that latest Trump remark. Morgan Stanley did just also note they also expect the statement to highlight the elevated risk of the Fed's dual mandate, where in the prior meeting they noted the committee judged that uncertainty around the economic outlook has increased. As always, there is a full News Squad preview available on the headline feed and the research suite.
All right, so we are getting some price action here, and we're actually getting one of those extended readings that I was looking for. Unfortunately, this is 7 minutes before the 7 minutes before the announcement, but let me see here if I can get a little bit more frothy here, maybe a minus 1200 reading. I don't mind fading this for a very quick scalp.
I'm just making you aware on that latest Trump headline where he said he's not open to pulling back 145% tariffs.
So this
just seeing some downside in US equity futures here.
1 second here. Here's NQ. It's kind of coming off pretty strong. That was a minus 1100 reading, and I would have gotten probably around 20 points right there. So I missed my shot. I was a little bit too patient on that one. Yeah, that was definitely a shot I should have took.
Further here from Trump does note might be easing chip policy
but it's okay.
towards
we can still head lower.
the Gulf. on geopolitical footing had a good outcome with the Houthis.
So, if you're watching this and you're trading, if you're actively trading some of the futures, I am right now with volatility. This low came on that which we were just talking about minus 1,000 to minus 1,200 reading, and I was hoping to see it maybe cross just a little bit lower there. And for those that don't know, think of this as like a boat, right? All the people are on one side of the boat when they're way down here, and it's about to capsize. And when it's about to flip over, they run back to the other side, and it'll allow to catch, some quick moves in the market. And I like to use maybe an MNQ contract, maybe 2 for a quick scalp. So I'm just kind of watching that here. We do got 5 minutes left to go before the Fed interest rate decision, which, by the way, rates are going to stay where they're at. If they don't, that's going to be a shock to the markets. That's for sure. There's a 97.7% probability the Fed's going to keep them where they're at. So it depends on what their guidance looks like and some of the things that the Fed, Jerome Powell, is going to say. All right, here we go. We're trying to get into another minus 1,000 reading. Maybe I can get what I wanted.
And a bit further here from Trump, says China should reassess who asked for a meeting. And just making you aware, he has Trump end remarks to reporters after swearing in ceremony.
So we were rejected again from the week-to-date volume-weighted average price. Pretty nice rejection there. Got now 4 minutes. I can't really take the trade in some of these accounts a minute, within the minute of a Fed press release. Just so you know, for some of those people that might be on trading prop firms, you should really know the rules about news releases. Okay, because some firms will cancel your accounts if you're in a trade within a minute of a specific news release. Some don't care, some do, and they'll just close your account out. Minute, 2 minute, I don't really know, it depends. But one of them that I trade, you can't be in a minute before or a minute after. Tick is buyers and sellers. It's unique to the NYSE here, but then there's some other products, index products in the States that actually have this. So you can look up NASDAQ and so forth. S&P 500, I believe, has the tick chart too. But a quick, if you want to learn how it's calculating and everything and what it actually is tracking, just a quick Google search. But I use it to fade moves in the market. All right, we got about 3 minutes. S&P 500 near the lows of the trading session today. NQ is back under its volume weighted average price from today's high. I'm just going to go ahead and remove that. That's not necessarily important for me right now. If the Fed keeps them at where they're at, is it bullish or bearish? The Fed is going to keep them where they're at. I don't think they're going to surprise the markets with a 97% probability. What's going to be bullish or bearish is just order flow that comes after it. Yeah, what Jerome Powell has to say, and maybe, is he going to lean a little bit more dovish and say, hey, we are going to have rate cuts in July. That's what they're preparing for. I think that the markets might respond positively to that. Or they're going to say what they always say, we're relying on our data, right? If it calls for rate cuts into July or into the future, we'll do so, but we're heavily relying on data. So he's a very good, smooth talker. We'll see how the market wants to digest all of it, but I wouldn't be gambling that I am smarter than the market. I'm going to wait for order flow to occur and go from there.
And just making you aware of other frame guy in that Trump comment, just notes I'm willing to lower tariffs to get China to the table. And making you aware just under a minute now until we get the latest Federal Reserve rate decision. They are expected to leave rates unchanged at 4.25 to 4.5%. Once we've gone through the rate decision, we'll of course move to the statement immediately after.
We're here live here in just a moment. Market's about to start moving. We'll anchor a volume weighted average price to the candle. We still have a wide open range of 0-date levels, so we can see a big move today. Spreads are widening out. Here we go.
10 seconds.
Well, I'm not going to lie, I'm going to be gambling. Well, hopefully the gambling works out for you.
That's rates unchanged as expected between 4.25 and 4.5%. And just looking at the statement now, it does note the committee judged risk of higher unemployment and higher inflation have risen. And economic outlook uncertainty has increased further, and economic activity has continued to expand at a solid pace despite swings in net exports affecting the data. And on the inflation, it does note inflation remains somewhat elevated, and committee will continue reducing holdings of treasuries and mortgage-backed securities at the current pace.
All right.
And now speaking on unemployment, it does note the rate has stabilized at a low level and labour market conditions have remained solid, and it was a unanimous decision.
No surprise there. Press conference now in 30 minutes. We're seeing how the market's digesting this. Market net flow is still pretty bearish. Not much has changed from the 0-date level. 5,600, 56.55. 5,600 is right down here. 56.55. So we have some interesting levels at 5,600 for S&P 500. Right here. So that could be a level to watch. I'll clone this and just draw it out the level so we can see it.
And just a bit further here, it does note it shows that the risks of higher unemployment and higher inflation have risen. That is a new addition to the statement.
All right. Looking at NQ over here on the right-hand side, we are above the VWAP from the Fed announcement here, and we're moving back to the opening range. So still pretty rather unchanged as the market's digesting the report. And we still have Powell on deck for the press conference. We can look at some individual names here. Yeah, Palantir and all that stuff in a moment. Yeah, we can look at Texan or TXN. Off to Maui. Nice, Barkster. That sounds nice. I was supposed to go in July. I don't know if I'll be able to make it now. Had some good news come. TBD. Or
and just recapping that Federal Reserve rate decision, we have seen a pretty muted reaction across markets. We did see two action in both US equity futures and treasuries. Treasuries are slightly higher from pre-announced levels, as are US equity futures. And just going through that decision again, rates were left on hold as expected between 4.25 and 4.5%, a unanimous decision. Within the statement, it does note economic outlook uncertainty has increased further, and it did add that risks of higher unemployment and high inflation have risen. And on the economy, it does note continues to expand at a solid pace despite swings in net exports affecting the data. Just for reference, in terms of Fed money market pricing via Refinitiv, do currently have 79 basis points of cuts priced in by year end. That's more or less the same as the 78 basis points pre-rate decision. And of course, attention does now turn to Powell's press conference, which gets underway in just under 27 minutes.
Yeah, we will watch Powell live. Hopefully I won't go back to the NASDAQ. I know it all started when I went to the NASDAQ. December 18th, a day that I will not forget. December 18th, right here. The day that I couldn't access anything for a minute. I was like in their lobby or whatever, and I'm just watching their screens because they have screens everywhere. I'm just watching everything just decline at a rapid rate. And I'm like, oh my gosh, everything that I own is being stopped out right now. And I can't do a dang thing about it. Could have got out earlier on some positions, and I was just sitting there. I was like, oh, this sucks. Everyone that was there, like, because it was a bunch of RIA, registered investment advisors, everyone's all like, oh, getting blown up by clients and stuff. What the heck is going on? It was the tremor before this. All right, we're below that VWAP from the announcement. Overall, we haven't really moved much, so it looks like the market's just on pins or needles right now. Everything seemed to come in line as expected. No surprise there. So we'll see what Powell has to say. Yeah, we can look at some of the other names here.
And just making you aware, we are monitoring comments now from China President Xi, who does note he's looking forward to talking ties and cooperation with Putin.
See what Google's up to now. Google's just getting crushed today. Somebody asked about Palantir. Yeah, so Palantir had a pretty big break on earnings. So I'd just be watching to see how this consolidates. I mean, this is like nothing, and it's been holding up. It's one of the stronger stocks. I'm not a big fan of the breaks on earnings, but being as bullish as this is, hey, perhaps this kind of builds out, maybe an early entry to retest these highs. And then you see more of like a kind of a cupping type pattern for a continuation. I think that's a possibility. I don't like just kind of like blindly entering on a bearish move like this on a break on earnings. So I'd just be giving it a little bit more time, seeing how it consolidates, shapes up. But overall, I mean, this stock has been very strong, and now we saw just a little bit of a crack here. But this crack right here, I mean, we're still positive on the year, right? And it was just like a day separated from new highs. So I guess like anybody that's long in this position, right? That's I guess a fairly big drop, like 13%, but it's also up 41% year to date. So it's kind of hard to get bared up on Palantir, really. All right, here we go. We're getting some movement in the ticks. NQ's dropping off. We're below that 5,600. This is kind of right in the realm of my types of executions. I'm giving it just a moment here. Maybe get a minus 1,200. All right, I'll try to see if I can set this up. Ready? A little bit more here. Just give it a little bit. All right. Ready, set. Bam. Okay. So I'll execute one MNQ contract, and I'll play for just a quick little bounce trade here, if it comes. All right. This is quite a bit of volatility. And I still think that the main area that we're going to be focusing in on, depending on what the Fed wants to do, is about 55.40. So 23.50. So I just got, I'm going to exit, right? Give me a second here. So I just made about $30 there. And then I did it on a couple accounts. Give me a second. All right, there we go. So that was about 40 points. That was just a very, very quick trade. I still think it obviously can go lower, and I'm not trying to play like the bottom. I'm just playing a quick fade tick. So that's what you just saw live. If you want me to walk you through what just happened and show you screenshots, I can do so. But on the minus 1,100, almost 1,200 reading is what I was going for. Didn't quite get there, so I just kind of jumped in. And when you're this extended, one, if it stays down here, that's very, very bearish, right? It's very, very bearish if it stays down here. But a lot of the times when you first initially get a fast move in the markets down to these levels, I'll start to look for maybe, 10 to 20 point bounce, maybe more on the NQ. So that's what I did. And then now we're like, notice how we're kind of coming lower. So it could be setting up again. I'm not looking to short right now, but I will play extended moves. So maybe another minus 1,200 reading. I'll try to maybe fade, but let me see here. Yeah, I might be able to do this again. All right. No, come on, a little bit more. I think I just missed that one. I was a little bit slow. Give me a second. Let's see, come on. I don't like it staying down here. I want to see a quick hit. Like, I need this thing to flush. Come on, push it, push it, push it, push it. I'm not going to get it. It's going to bounce. Yeah. It'll reset. So the level that you want to look for a potential move up higher to would be the volume weighted average price from the announcement, okay? I'm just waiting to see if we can get a stronger move and a deeper reading here. The problem with shorting here too, by the way, like, yeah, it's you're playing with continuation, but sometimes you'll have to deal with pullbacks, and then it'll eventually come through. So shorting at these lows, I'm not much of a fan of, but going long and fading, I am. But it has to be tactical. I have to have something to give me either a key level, right, to hone in on, or like a very dramatic extended reading. So it worked over here. Right, saw a nice little, what was that, 20-point bounce or so, and then it kind of opened up here, but I kind of chicken around right there because I wanted a little bit stronger of a reading, which I didn't get, and now it's consolidating, which gives me time to just kind of sit and pause. We have about 20 minutes left to the Fed conference. The level to watch now for the upside would, like, again, saying is the volume weighted average price from the Fed press conference, 760 on the NQ. It's not my phone ringing. It's actually the alerts on my that give me the heads up to get into a position. So you heard that ringing down here, right? When there's more volatility, you'll hear more ringing. You're about to hear more ringing. Love a good afternoon Powell meme. Anyone know why it dipped? It's just the market's reaction, right? Order flow. Let's take a look at market net flow, right? It's been bearish. We knew this, right? It's been bearish. We're down 40 basis points on the day. We're pretty close to the weekly implied move. Honestly, it looks like we're probably going to go tag that. We're not far from it, so why wouldn't we? We've tagged basically every single week this year other than 2 weeks. There's been, what, 16 or 17 trading weeks so far? Not in entirety, but about around there. So we'll see. We'll see if this is the contraction, right, leading to the expansion, which, if you remember, right, this was the rejection off the week to date. So if we can get above this level, this would be an area to be much more bullish above, that week to date volume weighted average price, right? When did I post that? 9:48 a.m. Right, 9:48 a.m. Zoom, zoom, zoom. Week to date VWAP has been the resistance to watch. That was right here. Zoop. Got to know these levels. Mad Hug, if you're wondering how I'm placing trades in multiple accounts, I have 3 different DOMs up, and they're copy trading across accounts. So I trade off the DOM. So I'm pretty quick. And then each DOM has copy trading set up. Or each thing that I have account has copy trading set up. Which I don't necessarily really recommend doing all of them all together, like, right? So I'll like different prop firms, like connecting them all together. I'm not much of a fan of that because right, if you make a mistake on one, like everything's gone. And even now I'm getting to the point where I'm like, maybe I don't even need a copy trade 5. Maybe I'll go stronger on one strategy with one account, and then I'll maybe copy trade a few others or whatever. But I'm still kind of getting used to the whole stuff. Yeah, Mad Hug. It depends on your like asking about setting up a video on how to set up the DOM and everything. It depends on like brokerages. Like I'm trading one right now with I don't actually know why I'm doing this, but I don't even know if I want to talk about it, to be honest, because I don't want it to sound like how can I word this? All right, well, okay, so for example, like every prop firm or every brokerage will have their own different DOM like that you can set up, and a lot of them are kind of like, some are good and then some are like, it really takes getting used to. And you know, I'm used to Tradeovate's DOM, like I'm pretty fast with that, but now I'm starting a new one, which is, I'm not going to mention the name, but it's not even really for making money. It's more of actually getting funding to like large amounts of money to trade bigger with a real actual trading desk, and I'm working with that right now. And the DOM and the setup is just like foreign to me. I'm like, what the heck is this thing? It's all like I cannot get my head around it. But I'm sure with time I'll get used to it. So the point there, what I'm saying is everyone is different. So if I make one video, it's like, well, what about for Thinkorswim, right? Or what about Interactive Brokers DOM, or what about Tradeovate, or what about this, or what about that? So we're getting some movement here, people in the markets. We have Powell here in 15 minutes. Watch the lower weekly implied move, lower daily implied move. That's the levels to watch. Market net flow is still bearish. It's picking up more bearishness. As you can see, the red line going up, the green line going down. We have convergence here. As far as some of the key levels to watch, which we honed in on, that 55.40 was the level, and I think that that's still in play. So, you know, I may play some quick fades if we get some extended readings, but the longer we stay down here, it could turn into a trend down, and that's something that you want to be very mindful of. A lot of people, when they see what I do here with ticks, they're like, oh, it's a minus 1,000, go. But is the S&P 500 or the NASDAQ, is it breaking a new low during that time? Because if so, you might want to just pause, right? Has tick been trading in this area for a while? You might want to pause. So it's not really just as simple as buy long, buy, go short, at these levels. You got to use a little bit of analysis, and then also understand where it's been trading and how long it's been trading around for. I probably have to put together like more videos and stuff on how I've been trading this, but it's been working good in volatile environments. But now when volatility kind of subsides, which it's kind of done these last few days, I'm more swing trading again. So we haven't yet tested this VWAP. It looks like we're going to probably test that right here. About I guess that's 20 points away. So we'll probably get that test there in a moment. 20 points on NQ about to happen. Depth of market. Matt Hug. DOM is depth of market. They call it like the DOM. Like it's the DOM is. It's let me screenshot it. Give me a second. It's this thing. This is a horrible screenshot. Let me figure. Let me go. It's this thing. There you go. This is the DOM. you know, you can buy, sell, you watch price go. That's the DOM. Yeah, we can look at some of these individual names. Dong or Dong. Tube. Dong, only way it goes up. Oh. The Dong. Trading the Dong. Dong futures. Okay. Sorry, I've been pretty active day trading this last month or so, just because of the conditions of the market. So I've been, you know, on this live stream. I'm watching this. We got now 10 minutes before he starts talking. We'll pull up some individual names why this is going. I'll get an alert if I get something. You know what? Actually, I'm going to keep this here, and what we'll do is we're going to look at expected moves for the week for the Mag 7 stocks, or the majority of them. So we'll see where they stand within their monthly and weekly. If you're in the Discord, you know these levels, but I'll share them for anybody that's not in there right now on the 15-minute charts for the individual names. So grab a pen and you can write them down and see how they trade around these levels, or what happens when they break. When they break, you can have some fireworks, right? I'll show you that with Google. But Apple had some movement today. Where's Apple? Apple is actually outside of its weekly implied move right now. Okay, we actually came into it, we bounced from it, and then we had the break, right? We had the break. So yeah, there's a high probability that we come back in here, right? That's kind of the probability that we float around the weekly implied move. But when you do get massive breaks, when the market's wrong, the market has to correct itself. And that's where you can really get these explosive type moves. So you'd want to go to like the daily chart and see what this might look like. But you are below a declining 5-day moving average, or below week to date. If you were bullish Apple, like I'm bullish the S&P 500, to build a position, buying a little bit here, like scaling in, like not trying to go load it to come up to here.
Press conference in wake of that Federal Reserve rate decision. In terms of what we're looking out for, attention will be on any further clarity surrounding the path ahead for the Fed, whether he maintains his wait-and-see approach as the committee waits for greater clarity. I'll also be paying attention to any communications he has around the Trump tariff impacts. And of course, regarding the latest statement, they did say economic outlook uncertainty has increased further, and did add the line that risks of higher unemployment and higher inflation have risen, which of course both sides of the mandate. And for those that want to watch the press conference live, we have put a link to the top of the headline feed.
So Apple, right? We had a low, a higher low, and right now we're pulling back again. So if you're bullish Apple and you're trying to like build a position because you don't think it's going back to 250, 260 or whatever the case is, and you think that like, you don't even care if it comes down here, if you're just trying to build positions. Well, the way that I would look at that as far as scaling goes is I like starting scales underneath weekly implied moves or monthly implied moves. So for example, if I started a position here, right, under a weekly implied move, next week, right, if it comes down to the lower weekly implied move, I'll probably do the same thing, right? I'll start a small scale and then I'll try to build around and build a core position in it. But that's, some of the types of levels that I'd be looking at. So right now it's underneath it, and we got the Fed just right around the corner, and we have a big announcement apparently from Trump that could be very positive, he says, right? We don't know like what that's going to be, and more importantly, we don't know how the market's going to react to it. Microsoft pretty much flat and unchanged on the week after a massive earnings move. Open weekly implied move 2 here, 423 to the downside. That's the upper monthly implied move is 423.80. So we're actually out what the market priced out for the month right now. So it's just consolidating that. There's Microsoft. Google is the one that I took a position in today. I did some day trading around it to play a bounce, sold a little bit on the bounce, and now I'm trying to scale more of a swing trade position. I got basically one scale in. I'll try to do 3 scales. My last scale would be down here at the lower monthly if we can get down there. But yeah, we broke the 2 standard deviation weekly expected move, and we're well outside of obviously the weekly implied move. So these type of moves, remember, if you think of this in terms of a distribution curve, right, 68% of the time will tag or will stay within the weekly implied move, right? That's the 1 standard deviation, right? Well, 2 standard deviation moves, right, 95% of the time, right, will close within it. And we're well outside of it right now. We're talking $4 per share or $3 per share below it. So there's a high probability that we come back into this area. And then you talk about 3 standard deviation moves, it's even, less likely. So if we do break through that, yeah, those are the levels that I would totally be fine starting positions and scaling into positions for a fade or a bounce of some sort. So that's Google. Then we'll look at Amazon. We got 6 minutes left, and we'll pull them up. Amazon's, in my opinion, I do have a position in Amazon. We did see some sell side with the rest of the market, but I think that if the market actually recovers, it's probably pretty positive for Amazon. We're above the week-to-date VWAP. We haven't tagged a weekly implied move, and I like the daily chart on Amazon. So this was actually, I posted this in Trade Ideas. The main level that I'm watching for on Amazon really is kind of this 193 right here, because you can see it acted as a level of support, and once support was broken, it acted as resistance and resistance. So it's kind of this like, gravity type of ordeal level here that we keep kind of magnetizing towards. But now, right, the 20 days starting to slope around here. We have consolidations. Earnings is out of the way. So in my opinion, I think this looks good where we're at for a break up here and potentially to retest that year-to-date volume weighted average price. I'm not so interested down here if it starts breaking, or even let alone the 20-day moving average. So if we break down through here, I'll wait to see if it like turns back around and then try to buy strength through. But to retest this, year-to-date VWAP, I think that's a stone's throw away at some point this year. Other people might look at this like, well, it's kind of wedging and flagging out. And I'd say, yeah, true. That's also a possibility. That's why I say I'm not really interested down here in these levels. So if it breaks down, right, just let it go. If it breaks further, okay, cool, I'll let it go. But if it all of a sudden starts to shape back up, okay, I'll start to revisit the trade. Where did Trump say he has an announcement? He said it from, I believe, the Oval Office, right? That's where he said it from. I forget who he was with, but he was like, I saw it. He said, I'm
just making you aware.
Just look it up, Google it. You probably see the video.
Commentary for the Fed in wake of that rate decision. Deutsche Bank's Lazzetti, speaking on business television, does note he's substantially lowering his June cut probability, and he does see the first cut in December. According to Refinitiv money market pricing, it now has moved out the first cut to September, with by year end 79 basis points, which is more or less the same as pre-decision.
Might as well wait for the 3 standard deviation. I don't like, but why, because if it doesn't get there, then I miss out on the opportunity. And it's not like I'm trying to be like, right. I'm not trying to catch the bottom, on a fade trade, on an intraday time frame. I am like literally trying to catch, not necessarily the bottom, but I'm fading the big move, but more on like a longer, like I'll scale it in, right? Cause I don't know when it's going to stop off this news. And I don't know if it's going to get to 3 standard deviations or not. So I don't mind taking if my full size position is 6%, I promise you that I'm not doing a full size position on a fade trade because volatility is increased. So I can do maybe 3% and I'll break that down into 1%, another 1%, and another 1%. And that'll be the scale. So I'm not I don't care if I'm wrong on the first scale. And if I'm right, okay, cool. I make a little bit of money, right? Whatever. It's almost nothing. But it helps. It gets a couple of basis points here, a couple of basis points there, and it builds up over time if you're consistent, right? If you lose your consistency and you try to go all in all at once, well, eventually you're going to be wrong with that strategy, and that can lead into quite the blow up. So I'm thinking not just for today, I'm thinking for tomorrow and the next month, the next year, and what can I do strategically to stay in the game the longest? And from my experience, the way to stay in the game the longest is by focusing the most that you can on risk and not trying to catch the exact move. From my experience, entries don't nearly matter as much, as much as exits, surprisingly enough. Right, and I can break that down for you if you don't believe it. But exiting is how you keep your money, right, and how you protect your money. All right, we're bouncing back up a little bit here. We got 2 minutes to go. I'm going to take a quick break and maybe refresh some of my water, and I'll be back in just a moment. Nice, John. That's a good note there. Yeah, he did say it was not necessarily a trade deal. So somebody had mentioned maybe it's a tax relief, and that could be a big market mover, I guess. I don't know. We'll see what the market wants to do. I'm going to pull up ticks here. I am interested in trading still. Market's just settling in here. Market net flow still bearish. We're back above the volume weighted average price here from the announcement. So that's a positive sign. So the average person from the announcement is now in the green. We came to that 5,600. We undercut it and we're back to it. 5,600 is this level right here. And then 5,540 became that main center of attraction. So 5,540 is still down here. You'd want to pay attention if we start selling to that level, which would probably be in confluence with the lower weekly implied move there too, I believe. Let me see here. SPX is 5556. 5556 is the lower weekly implied move down here for the SPX. 5556.77 to be exact. So if it does break down to here, depending on how it gets down there, that'd be an opportunity for me to do some sort of a fade trade, fade sort of bounce. I'll be right back. I'm going to put this on the screen. Actually, no, I'm going to actually have Powell in the background. I'm going to go ahead and press play here. Just happened. Did my audio go out? The heck? Let me see here. Give me a second. I'm gonna just press play here. No, okay, he's coming.
Good afternoon.
Good afternoon.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable price. The economy is still in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Pardon me. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were likely driven by businesses bringing in imports ahead of potential tariffs. This unusual swing complicated GDP measurement last quarter. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 3% rate in the first quarter, the same as last year's pace. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged 155,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based measures. Survey respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we'll balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week. Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Nice reaction so far. We're still underneath the 30-second opening range.
CNBC. Thank you, Mr. Chairman, for taking my question. A lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile, there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Well, so as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out, and also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that. So, I mean, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. You know, I think, if you look at where we are today, we have an economy that, if you look through, you know, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's naturally a lot of around 2021 and supply shocks. But there are some who argue that the current situation has notable differences. Energy costs are down. Housing imbalances look nothing like they did 4 years ago. Labor demand appears to be gradually cooling, with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see, is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And, you know, we'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by where tariffs are going to land, how long it will take. But for now, it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
You know, as I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And you know, when things develop, of course, we have a record of we can move quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place, and you know, as that develops, and I can't really give you a time frame on that.
John L.
Janelle Marte with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
Well, let me say, I mean, so let's look back and see where we are. So to go through 2024 up to the day, we've had you know, unemployment in the low 4s for more than a year. We've had inflation coming down now in the mid to low 2s. We've had an economy growing at 2.5%. So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in in our thinking, we would never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now. And we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
Colby Smith with the New York Times.
Market's holding up
How
well.
much weakness does the committee need to
Hasn't
see,
done anything
though, in
yet
the labor
since
market
the
and the
announcement.
economy more
Sold off,
broadly
came back.
to lower interest rates again? Is it about a certain increase in the unemployment rate over a period of time, or perhaps a certain
Still underneath
number
the
of
opening
negative
range.
monthly job reports? I mean, how are you making that assessment?
Underneath the week-to-deep VWAP and
So first of all, we don't see that yet,
SPY.
right? We have 4.2% unemployment, good participation, wages behaving very well, participation, I mentioned, at a good level. So, with the labor market, we would look at the totality of the data. We'd look at the level of the unemployment rate. We'd look at the speed with which it's changing. We would look at the whole huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a difficult balancing judgment that we'd have to make.
On that point
I'm not
about
in an active day trade
balancing,
right now.
you've mentioned that the committee would consider how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus
We did
data
lose convergence
dependence?
in market net flow, by the way.
It would be a combination of the
makes
two.
sense on the counter-trend
let's just say this would be a complicated and challenging judgment that we would have to make. Yeah, we're not in
Market's
this
just
situation. But the
digesting.
situation is if the two goals are in tension, so let's say that unemployment is moving up in an uncomfortable way, and so is inflation. Not the situation we're in, hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We'd look at all those things and make a difficult judgment, and that's in our framework. It's always been in our thinking. We haven't faced that question in a very long time. So, again, difficult judgment to make, and not one that we face today, and we may never face it, but we have to be keeping it in our thinking now.
Edward.
Thank you. Edward Lawrence with Fox Business. So we had the CPI report that came out that showed month over month the first decrease in inflation in about 3 years. The jobs report, you said, solid, that we saw. At the same time, we have those new tariffs that we're living under. So given this, should the Federal Reserve be cutting rates at all this year?
It's going to depend. I think you have to just take a step back and realize this is why we are where we are. We're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't.
Right here.
And we just don't know. Until we know more about how this is going to settle out and what the economic implications are for employment, for inflation, I couldn't confidently say
Getting a
that
minus
I know
1,000
what
reading
the
here
appropriate
on
path
the
will be.
So following on that, just, so then how does President
Maybe a
Trump
retest
calling
of
on you
this,
personally, as well as the Federal
CPI,
Reserve,
or
to
CPI
make
update,
rate cuts affect your
press conference
decision
VWAP?
today and affect your job difficulty?
Doesn't affect our doing our job at all. So we,
Now
we're
under
always
1,000
going to
with an
do the
RSI
same
that's
thing,
getting
which
really
is
frothy. So
we're
may see a
going
little bit of
to
a
use our tools to foster
move here.
maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Howard.
word.
Hi, Howard Schneider with Reuters, and thanks for the time. I'm wondering, I mean, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering what your intuition tells you about the underlying direction of the economy right now. Many of your colleagues have said they feel growth is slowing.
Still under a
If so, do you
1,000.
have
This is
any
a pretty
sense of by
steep
how-
reading to stay
of
down
by
there
how
that long
much,
for.
to what degree the slowdown may be?
Minus
What does your gut
1,200
tell
now.
you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated, and that the
dangerous area to
downside
hold.
risks have
We definitely want to see some
increased.
relief up here, probably
The
back to the
risk
VWAP.
is, as we pointed out in our statement, the risks of higher
There it
unemployment
was.
and higher inflation have risen, but they haven't materialized yet. They really have. They're not in the data yet. So that tells me more than by intuition, because I think
go.
it's obvious actually that the right thing for us to do is we're in a good place. Our policy's in a very good place. And the right thing to do is await further clarity. And there's usually things clarify and the appropriate direction becomes clear. That's what usually happens. Right now, it's very hard to say what that would be. In the meantime,
I
the
like
economy
those
is doing
trades.
fine. Our policy isn't, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in, last summer. So we think it's in a good place, and we think the appropriate thing is for us to wait and see and get more clarity about the direction of the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot of negative stuff, negative sentiment that was in there. And I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book was talking about the beginnings of layoffs in some industries, prices
Definitely
rising
caught 20 to
in
30
some
points there.
places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
Minus
It
1237.
may
That was the
well.
lowest
It
tick reading.
just hasn't shown up yet.
With an RSI that was kind of frothy. I have special settings
we
for
all
this.
look at all these sentiment
That
and
was a
read many,
clear
many
as
individual
day
comments just to
type of
get
fade trade that I
a
like to
better
do.
feel. And businesses and households very broadly are concerned
Quick.
and
Now I wait to see if it can happen
postponing
again.
economic decisions of various kinds. And yes, if that continues and nothing happens to sort of alleviate those concerns, then you would expect that to
sure we can
begin
get
to
some
show
movement
up
here.
in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hadn't happened yet. And also, there are things that can happen that will change that narrative. I mean, they haven't happened, but it's possible to imagine things that, but in the meantime, yes, we're watching it extremely carefully like everyone is, but don't see really much evidence of it in actual economic data yet. And by the way, consumers keep spending, credit card spending. It's still a healthy economy, albeit one that is shrouded in some very downbeat sentiment on the part of
What about the
people
delinquency
and
rates on those
businesses.
credit cards?
Michael McKee.
Michael McKee from Bloomberg Radio and Television.
Forgot to leave-
The Fed's been
left that part
criticized
out.
recently by a former governor for what he calls mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say the critique again.
That
Pay as you
the
go
Fed
for
has been
DoorDash?
involved in
What is
mission,
that?
gets involved in
Like-
using too many new tools to deal with problems
credit
that go
card for
too far.
DoorDash?
Is that something that
It's expensive enough to need that, probably.
The critique was based around the fact that you did
We're going back down to
QE
minus
and
1,000 here on
QE
tick.
and QE and
Sure.
But it's also happening as we
went
could break this
beyond
low,
the
so
narrow
it's
confines
not
of
the
your
one that I
mandate.
like to trade necessarily.
Well, I mean, there are a couple. That's not really beyond the
So-
confines of our mandate. Look, I would say this:
prefer-
we did
And
things.
look at how it bounces pretty
Essentially,
pretty
we're
fast
on an
little move there.
emergency footing for a
I would
couple of
prefer
years
it
in
to
the
cut
pandemic,
down
and it's
through that
very
and then
fair
give
and very
me the
welcome
reading still.
for
but
people to look back
couldn't get
over
that
what
one
we
in.
did and say, hey, you could have done this better and different. And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining it in real time. I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that the reason we did was we were concerned that we didn't want a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on for a long time to QE, and we, of course, tapered and everything. And then we immediately went into QT, and, you know, we're down a couple of trillion. But I get you know, we certainly, with the benefit of hindsight, could have tapered earlier or faster. That's absolutely right. But this is all very welcome. You know, it's you know, we knew doing this in real time that we weren't going to get it perfect, and those kind of you know, after action.
Getting just chopped up here at the volume weighted average prices.
We're doing the same thing, and you know,
this is the for the low of the trading session. We're above that, and we're now getting back above, kind of right around the announcement of the Fed decision.
Outside of
we're right under that,
such as climate change and trying to ensure that certain groups are benefited by your economic policies in terms of employment, et cetera.
So, okay, on climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've
done I know that my mic is open?
Really very little on climate. You can say that little bit that we've done was too much, but I wouldn't want to give any impression that you know we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one guidance for the banks, and then we did a one-time stress analysis, climate stress analysis, and that's it. And you know, we dropped out of the network for greening the financial system. So we didn't do much on climate, but I do think, and I've said this publicly several times, I think it's a real danger for us to try to take on a mandate like that,
which is where we close for the day.
Very narrow application to
traders are reaching for 56.25 on SPX. So
if you go for things that are really not on your mandate,
around there, I guess, unless
why are you independent?
They start reaching elsewhere.
That's
currently the main level of attraction.
Think we've done a whole lot less on climate than some people seem to think we did. Anyway, that's what I think.
Should you have taken on the question of bringing unemployment rates down for specific categories?
We didn't do that. You know, what we said was that we never targeted any unemployment rate for individual racial or demographic groups. What we said was that maximum employment was a broad and inclusive goal. And I think what we meant by that was we're going to consider the totality of the country as we look at our maximum employment goal. Of course, we were never going to target any individual group with that, but I think some people, you know, wanted to hear it that way, but that's not at all what we
The time
meant.
that I got the tick reading that I didn't take.
So that's just not a correct reading of.
We just hit yesterday's VWAP as well as
maybe people
the
found that
opening
confusing,
price.
and you know, we have to take that
We're
into
back in the
consideration.
30-second opening range right there. That's those blue lines.
Jolene.
And what you just heard there was a ring for a
Hi, Chair Powell.
1,000
Thanks for taking our
reading.
questions today. I'm Jolene Kent with CBS News. You've said wait and see, and the economy is doing fine today, but the impact of tariffs are already showing up at the ports. Businesses, big and small, are telling us that they feel it, and most importantly, consumers say they feel it, that the challenges are here, and there's no waiting and seeing. For Main Street,
Go,
what
baby,
is
go.
the breaking point? What would have to happen to prompt a rate cut specifically?
Well, you know, so we really don't see in the data yet big economic effects. We see.
So that's pretty strong candles right there with some good volume behind it. So I'd be watching for the consolidations.
Things like that. So people they're worried now about inflation. They're worried about the you know, a shock from the tariffs, but they really haven't.
That flow is not giving us much today right now, and we're just at the opening price for today,
be looking at
as well as the daily VWAP from
yesterday's
yesterday's price
also
action.
the real economic data as we assess what it is we should do. And remember,
And we're back. We're at 56.25 now. That's the level that traders were at,
weakening economic
reaching
activity,
at.
which translates into
Larger level
higher
to the upside
unemployment.
was
And the other
originally
would
the
be potentially higher
5,700,
inflation.
which
Again,
that'd
say
be
it
crazy.
again, the timing,
Wouldn't
the
that be
scope,
something?
the scale, and the persistence of those effects are very, very uncertain. So it's not at all clear what the appropriate response for monetary policy is. at this time, and and by the way, our policy is in a good place, so we think we can wait and move when it is clear what the right thing to do is. Really not at all clear what it is we should do. So people are feeling stress and concern, but unemployment hasn't gone up. Job creation is fine. Wages are in good shape. People are not layoffs, or people are not getting laid off at high levels. Initial claims for unemployment are not increasing, in any kind of impressive way. So the economy itself is still, in solid shape.
Just a quick follow-up. President Trump now says he does not plan to remove you as chair. When you heard that, what did you think?
I don't have anything more for you on that. I've pretty much covered that issue. Thank you.
Chris.
That is kind of what he's saying.
Hi, thank you. Chris
We'll figure it
Rugier,
out.
Associated Press.
Data.
Well, I just wanted to follow up. Earlier, it sounded like you said it was unclear how the Fed, what kind of interest rate decisions you will make later this year. So does that, in March, there was guidance that 2 cuts might happen. 2 cuts were penciled in for this year. Is that now, that guidance from the last press conference, has that been overtaken by events at this point?
We don't do a summary of economic projections at every meeting, as you know. We do it every other meeting, and so this was the meeting when we didn't do it.
All right, well, we're still chopping in the 30-second opening range, and we're just tagging in Confluence yesterday's daily volume weighted average price.
I really wouldn't want to try to make a specific projection for
getting that little consolidation here, so we'll see if we can break above it and actually get a real move.
And you'll have another SEP. I'm not going to hazard a guess here today.
Pretty much just
at
at the
again
where we were when we got the announcement.
We think our
slightly
policy
above.
rate is in a good place. We think it leaves us well positioned to respond in a timely way to potential developments.
Looks good so far.
That's where we are, and that, depending on the way things play out, that could include rate cuts. It could include us holding where we are. We just are going to need to see, how things play out before we make those decisions.
Great, and just to follow up on that, I mean, when you address the issue of how the Fed would handle both rising unemployment and rising inflation, how are you thinking about the fact that addressing one could exacerbate the other? So a rate cut to reduce unemployment could worsen inflation and vice versa. How do you handle those challenges?
You just captured this is the issue with
Hey, buddy, you're kind of killing my vibe.
Being in tension.
Okay?
It's a very challenging question. Now, there can be a case in which one goal is very far, one variable is very, very far from its goal, much farther than the other, and if so, you concentrate on that one. And frankly, that was the case. Well, it wasn't a case where they were really in tension, but if you go back to 2022, it was very clear that we needed to focus on inflation.
Mm-hmm.
The labor market was also super tight,
flagging
so
out
it wasn't really a trade-off.
Not the greatest conditions for a flag, but we got a flag.
I think what our framework document says. It says we'll look at how far each variable is from its goal, and also we'll factor in the time it would take to get there.
Let's go.
So, that's going to be potentially a very difficult judgment, but the data could break in a way that it's not. I just don't think we know that. The data could easily favor one or the other, and right now there's no need to make a choice, and no real basis for doing so.
Victoria.
Hi, Victoria Guido with Politico. I wanted to ask, Congress is currently debating spending cuts alongside extending the tax cuts. And I know you've talked many times about how the path of the debt is unsustainable, but given that we're also talking right now about the economy slowing, potentially even recession, I was just wondering, is there a danger that spending cuts now could slow growth a lot more?
We don't give Congress fiscal advice. We take what they do as a given, and we put it in our models and in our assessment of the economy. So I wouldn't want to, speculate on that. I mean, I think we do know that the debt is on an unsustainable level, on an unsustainable path, not at an unsustainable level, but an unsustainable path. And it's on Congress to figure out how to get us back on a sustainable path. And it's not up to us to give them advice.
Well, do you think that they should take macroeconomic conditions into account as they look at this?
I think they don't need my advice and our advice on how to do fiscal policy any more than we need their advice on monetary policy.
He is smart. The answers that he comes up with, the way he kind of moves through these
Thanks,
questions.
Mr. Chairman.
Pretty
Andrew
crazy.
Ackerman with the Washington Post. In your Jackson Hole comments last
Gotta give
year,
it to him there.
you said you would not welcome further cooling in labor market conditions. The unemployment rate then was 4.2%, which is what it is now. Many forecasters now predict a higher jobless rate. How has your tolerance for weakening labor market conditions changed compared to a year ago?
So it was quite a different situation. What was happening last year is that over the space of 6, 8, 7 months, the unemployment rate went up by almost a full percentage point. And it was click, 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 click each month. And you know, everywhere people were talking about downside risks to the labor market. At the same time, payroll job numbers were getting softer and softer. So there was a really obvious concern about downside risk to the labor market. And so at Jackson Hole and then in September, you know, we wanted to address that forthrightly. We wanted to show that we were there for the, I mean, we'd been there for,
No
for
comment for the
inflation
next hour.
for a couple of years. And we wanted to show also that we're there for
I would
the
love to
labor
see how the market
market.
responds to
And it was
that.
important that we send that signal. Fortunately, since then, the labor market has really, and the unemployment rate have really been moving sideways at a level that is, you know, well in the range of mainstream estimates of maximum employment. So that concern has gotten a lot less. So, you know, you're at 4.2% unemployment. I think we were in a very different situation. Now we have a situation where, you know, the risks to higher inflation and higher unemployment have both gone up, as we noted in our statement, and we've got to monitor both of those. We actually have a potential situation where there may be a trade-off or tension between the two, potentially. We don't have it yet, and we may not have it, but that's what we have, and that's why I think it's a very different situation.
I mean, I guess I want to follow up by asking how much of a rise in the jobless rate you could tolerate.
So far, a good consolidation right now on this smaller time frame. Price action is getting very tight here, so we're probably going to see a move fairly soon, whether it breaks down to come down to these VWAPs or break up and we try to go retest that 900 and potentially break through it.
Focus more than
It's getting very tight.
That would tell us what to do with policy. If they're more or less, you know, equally distant and equally or not distant, then we don't have to make that assessment. You know, the assessment is you wait. So I'm not going to try to be really specific about what we need to see in terms of a number. But if we did see, you know, significant deterioration in the labor market, of course that's one of our two variables, and we would look to be able to support that.
If we were to break out,
you'd hope that it wasn't also coming at a time
measured
when
move could
inflation
be around
was
20,000.
getting very bad. And again, we're speculating here. We don't know this. We don't know any of these things. It's very hypothetical. We're just going to have to wait and see how it plays out.
Thanks.
Claire Jones, Financial Times. In terms of getting some clarity, we've got some talks at the weekend in Geneva between the US and China. A lot of economists are attaching an awful lot of importance to what we hear from those talks. How much importance are you attaching to them in terms of judging what will happen to the US economy going forward? And just in a similar vein, you know, some economists are saying it's days, not weeks, that we have until we start to put the US economy at risk of seeing the sort of pandemic-era shortages and higher prices if we don't kind of soothe relations between the US and China. So it'd be good to have your view on that too.
So, you know, these are not talks that we're in any way involved in, so I really can't comment directly on them. So, but what I will say is you know, we had, coming out of the March meeting, the public generally had an assessment of where tariffs were going, and then April 2 happened, and it was really substantially larger than anticipated in the forecasts that I had seen and in our forecasts. So, and now we have a different,
Apple down 1.68%, Google now down 7 to 8%.
Administration is entering
Meta
into
up 1.75%.
With
Tesla's flat now in the trading session.
Partners, and that has the potential to change the picture materially or not. And so I think it's going to be very important how that shakes out. But we simply have to wait and see.
It's down here actually.
How it works out.
Kind of
it
interesting.
Certainly could change the picture, and we're mindful of not trying to make conclusive judgments about what will happen.
Would be the next level to the upside.
At a time when
when
the facts are changing.
So a little change taking place.
And just on the fall in shipping volumes from China over these
We're
tensions,
just pinned at the lower
do you
portion
share
of this
that
opening
concern
range
that
right
we
now.
could start seeing goods
market ain't making a
shortages
choice
and
yet.
higher prices in the coming weeks if this isn't resolved very quickly?
You know, I don't want to get we shouldn't be involved even verbally in the questions about the timing of these things. Yes, of course we follow all that data. We see the shipping data, we see all that, but ultimately this is for the administration to do. This is, this is their mandate, not ours. And I know as you can see, they're again
Hey, what's up, Omer, by the way?
beginning to have talks with
up,
many
generator?
nations, and that has the potential to change the picture
What's up, Ace? What's up, Poop?
materially. So we'll just have to wait and see.
The settings on the tick alert. Yeah, I'd have to pull them up.
Kosuke Takami
Might be
with
a moment here.
Nikkei. Thank you for doing this. The volume of imported goods increased significantly in the first quarter. Do you think that this situation could cause a delay in the impact of tariff
Could it be a
on
bull flag
inflation?
breakout? Yeah, it might
And,
be, but we're still.
Does this mean
The
that
thing that I don't like
it
about
will take
this current
longer
breakout right here
time to
is you're still
reduce
dealing with this
uncertainty?
overhead. This is the yesterday's
decision we
VWAP
made
and
today?
the kind of opening price
decision?
here. So
So
if we can get
the
through
future
this, I think that
decision.
opens the door for 900. And yeah,
So,
it looks pretty decent.
The volume of the imported goods has increased significantly, so the
Takes
impact of
Powell to say
on
one
the
thing to have this
imported,
market completely just and
inflation,
utterly shake.
may delay. So, what is the impact to your future decision?
Okay, so, I mean, I think we think that there was a big spike in imports, right? Very big, historically large, really, and to beat tariffs. And now that should
By the
actually
way, we're coming
reverse.
back up to that week-to-date
it's,
volume-weighted
it's the
average
difference
price on
between
SPY,
It's exports minus
which
imports.
once again
So,
acted like a level of
and
resistance. So we got to
imports were
get
huge, and so
through
that
that
would
dang
convey
level.
a very
Be a lot
negative
more
contribution
better
to
picture for the markets if
U.S.
that was the case.
Annualized GDP in the first quarter, as we all know. So that could, in the second quarter, be reversed so that we have, an unusually large contribution to usually positive. That's very likely as imports drop sharply. You could also have, very likely you'll have restatements of first quarter. It'll turn out that consumer spending was higher. It'll turn out that inventories were higher, and so you'll see those data revised up. It may actually go into the third quarter too, and so I think this whole process is going to a little bit make it harder to make a clean assessment of U.S. demand. I mentioned private domestic final purchases, which doesn't have inventories, government, or inventories, government. Anyway, it's a cleaner read on private demand. But that too probably was flattered a little bit.
Still getting rejected from opening price and yesterday's VWAP.
By strong demand.
So this would be the
for
level to
imports
watch here
beat tariffs.
to get above this.
That might overstate.
We're getting hung up
It's a
at.
really good reading, 3% PDFP in the first quarter. That might actually overstate. So it's not really I don't think it's going to affect our decisions. I will just say, though, that it's a little confusing, and it's probably less confusing to us than it would be to the general public as we try to explain this. It's complicated, and GDP is sending a signal, PDFP is sending a signal. It's a little bit confusing, but I think we understand what's going on. It's not really going to change things for us.
See if we can get a -1,000 reading. Because if you're bullish, if we can get a -1,000 reading, that can be a good thing.
Courtney Brown
down into these
from
levels.
Axios. I guess, we talked about some of the indications of potential layoffs, price hikes, an economic slowdown, all being evident in the soft data. I'm curious why the Fed needs to wait for that to translate into hard data to
560
make any
overhead.
type of monetary policy decision, especially
SPY.
if the hard data is not as timely or might be warped by tariff-related effects. Are you worried that the soft data might be some sort of false warning?
No, I mean, look at the state of the economies. The labor market is solid, inflation is low. We can afford to be patient as things unfold. There's no real cost to our waiting at this point. Also, the sense of it is, we're not sure what the right thing will be. There should be some increase in inflation. There should be some increase in unemployment. Those call for different responses, and so until we know, potentially call for different responses. And so, until we know more, we have the ability to wait and see. And it seems to be a pretty clear decision. Everyone on the committee supported waiting. And so that's why we're waiting.
Just a very quick follow-up. There was this sort of vibe session, if you will, where the sentiments expressed in soft data did not translate into the hard economic data. How are you thinking about that when interpreting some of the signs in the softer survey data?
I think going back a number of years, the link between sentiment data and consumer spending has been weak. It's not been a strong link at all. On the other hand, we haven't had a move of this, speed and size. So it wouldn't be the case that we're looking at this and just completely dismissing it. But it's another reason to wait and see. You're right, though. We had a couple of years during the pandemic where people were saying just very downbeat surveys and going out and spending money. So that can happen, and that may happen to some degree here. We just don't know. This is an outsized change in sentiment, though, and so none of us is looking at this and saying that we're sure one way or the other. We're not.
Matt.
We're not sure.
Thanks, Chair Powell. Matt Egan with CNN. So you mentioned earlier that you're monitoring the shipping data, and we have seen in the shipping data that imports from China into the Port of Los Angeles have plunged, and that has raised concerns about potential shortages. What tools, if any, does the Fed have to ensure that prices and inflation expectations don't get out of hand if tariffs do cause significant supply chain disruptions?
I mean, we don't have, the kind of tools that are good at dealing with supply chain problems. We don't have that at all. That's a job for the administration and for the private sector more than anything. What we can do with our interest rate tool is we can be more or less supportive of demand, and that'd be a very inefficient way to try to fix supply chain problems. But we don't see the inflation yet. We're of course reading the same stories and watching the same data as everybody else. And, right now we see inflation, kind of moving sideways at a fairly low level.
If I could follow up on that, President Trump has indicated that he will likely name a replacement for you when your term as chair expires next year. But your position on the board runs through January 2028, I believe. Would you consider remaining on the Fed board even if you're no longer chair?
So I don't have anything for you on that. My whole focus is on, and my colleagues' focus is all on.
Price action still getting very tight here, people. Just pinned on the lower opening range here, just like locked in. So this is kind of the chop zone. You just, to be bullish, you got to get above these levels.
Day and night, and
to be bearish,
challenging situation, and that's
technically it would be more bearish underneath this, but.
Let's go to Jennifer for the last
Right now, we're just consolidating after kind of this little ramp up here.
Jennifer Schonberger with Yahoo Finance. Public records of your schedule so far this year show no meetings with President Trump. Past presidents Obama, Bush, and Clinton have all met with Fed chairs, and you met with Trump during his first term. Why haven't you asked for a meeting yet with the president?
I've never asked for a meeting with any president, and I never will. It's not, I wouldn't do that. There's never a reason for me to ask for a meeting. It's always been the other way.
So would you want to meet with him if given the opportunity to get more information?
It's never an initiative that I take. It's always an initiative.
-1,000 reading there.
I don't think it's up to a Fed chair to seek a meeting with the president, although maybe some have done so. I've never done so, and I can't imagine myself doing that. I think it's always comes the other way. A president wants to meet with you, but that hasn't happened.
And if I could just ask one question on monetary policy. When it is time to cut rates, how will you determine how far down rates will have to come to try to keep a balance on the inflation mandate as employment weakens?
I think once you have a clear direction, you can make a judgment about how fast to move and that kind of thing. So it's really the harder question is the timing, I think, and when will that become clear? And fortunately, as I mentioned, we have our policy in a good place, the economy's in a good place, and it's really appropriate, we think, for us to be patient and wait for things to unfold.
Save us, Powell, save us.
About what we should do. Thanks very much.
All right, there it is. Whole lot of nothing. Okay, but now the market at least could be freed up a bit here. We'll see if the market wants to make its decision now. At the moment, we are still below the opening range, which is not the greatest sign. And we've been holding this opening price right here. And that green line that's kind of hidden right there is yesterday's daily volume weighted average price. And you can see that that's been kind of a level of contention with throughout the trading day, kind of. We broke above it, we broke down through it, flushed it, we acted as resistance there, and then we came back up another resistance tag. Now as price is pulling back in here on NQ, we're holding the low VWAP, which is from the today's low, and then right here is the JWAP, which is the Fed interest rate decision. So if we even come down to here, you know that would just potentially be a higher low within in a range that we're kind of a bearish range, being underneath that opening range. Honestly, I mean, we haven't done anything. We are exactly where we were when, I mean, we're slightly above it when we announced, okay? The difference here is we saw a nice little thrust of volume, so. Let's see market net flow, if that's given us anything. There's no convergence here. However, the green line's been shooting up, and that's positive. 560 on SPY, we're actually above, so maybe target 562. That's actually positive to see us above 560. With this big green bar because it can repel price. Now, if we get below that, it's a different story, but we're currently 33 cents above that. VWAP has been holding as a level of resistance multiple times, as you can see. The more times it's tagged, the more likely it is to eventually break. You know, think about this, like if there's just huge orders at this VWAP, right? Just say, I mean, this is a kind of a rough example, but say if there's, you know, I'm just gonna say 1,000 orders short, right? And then you come back up to it and then, right, they fill, right? Some gets like, then it goes down to 800, right? And it rejects down, it comes back up again, you know, goes down to 600, right? This is just a whatever example, just to give you a thought there. And then boom, it comes to test it again, right? You're knocking it down. Oh, now there's only 400. Oh, you come back again, now it's only 200, right? So if you think of it in terms of that, the more times it's tested, the more likely it is to eventually break. So let's see if that happens. If it can be today or if it's going to get rejected again and maybe retested another period. But clearly, even if it doesn't break through it this week, which we still have much time left in the week, you would want, because of how much this has been in play, you would want to actually carry this on to next week. Because, for example, like say if we do break through it, boom, we see this big move. If price all of a sudden were to start selling off, it'd be interesting to know where this level is next week. Or say if we broke down, boom, right? It'd be interesting to know where this level is come the following week too, because it can act as, once again, a level of resistance or a level to be more bullish above, right? Okay, where are we? We're still just chop. Decision time. Tick chart, not giving us anything. Market net flow, not giving us anything here, but the green line going up is rather nice. I'd like to see the red line continue to flatten or potentially go down. And then that might open the door to hit the upper gamma range, which is back up there at about 562, as we've come up there earlier trading session, mid-trading session, and we're kind of below that right now. So prove yourself. Prove yourself right now, market. It's time to prove yourself. Can I get in the chopper? Get into the chopper. I know, I still need to get a chopper. I got the pineapple. I got the I got the pineapple. I got the Tesla. I got the rocket ship. I need the chopper. Thanks, Osprey. Appreciate that. It's interesting. We're just in the very micro kind of time frame here. We keep getting kind of flushed through this VWAP, and then we kind of like jam it back right into the lower, the lower portion of the opening range. This is the 30-second opening range here, and this is the midline right there. So when you're below it, I'm not really happy below it. I'd be much more happier above it, thoroughly above through 1900. But I mean, I can say it'd be a little bit more bullish if we can just get at least through 880, yesterday's VWAP, and the middle of that. Not going to rule that out yet, that's for sure. Keep redrawing this. Just look at this trend. You're seeing these lower highs. Right, the lower highs. A lot of sideways movement here. And then SPY too is kind of just tagging this VWAP, and that VWAP is actually from this low, from that scary day that we opened, you know, for the week. I think it was the week that started, or the day that started down here, is everyone's freaking out. And then it recovered significantly, followed through, and since then we've been just kind of doodling around this VWAP. Neutral stance right here. Market needs to confirm something. It needs to confirm. Does Gamma Labs show different stuff than Tradie Ticks? Yeah, on occasion. Yeah, they're not always the same. Sometimes they aggregate their data a little bit differently. This is that 560. We're currently under that in SPY, which is not a good sign. We're under it by 50 cents. So remember what I said. If you're under it, it can repel price away. You want to be above that. So when we slipped under it, it's kind of repelling the price right now as we speak. Slipped under 560, repelling price down. So a quick recoup of that would be good. Here comes a lower reading for ticks. See if we can get a bigger flush here. I might try to scalp. If I can get a little bit more here, come on. Crack down. Give it to me. Give it to me. Stronger, stronger. What is going on right now? Give me a second, I got a phone call coming in. No, I don't need that phone call. So we're getting at that, man, I really wish it would just press a little bit more here. That would have been the CPI, sorry, I keep saying CPI, the Fed press conference, volume weighted average price down here with a low reading on tick would be a nice little bounce trade or potential bounce trade. Now it's just kind of floating here, which I'm not a fan of. I want to see a stronger move. That could open the door for something. Here we go. Come on, go down, a little bit more, a little bit more. Like my son says, more, more. I want more. More, 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 more. Here we go. All right, keep going, keep going, keep going. A little bit more, a little bit more, a little bit more. Come on. All right. It's pretty good. Let's go. Now, boom. Okay. I'll establish one MNQ. One MNQ. Almost a minus 1200 reading here. Kind of holding down there too, which is not a great sign. Prawn, the way that I'm using it right now is when things get very, very frothy from a tick perspective, I like to fade the move for a couple of points. That's all. So we're selling off right here after this kind of contraction, and I was looking to get one MNQ contract below these levels and see if we can get some sort of a bounce from it. I'd like to see maybe even a stronger reading down, and then maybe scale into 2 MNQs would be kind of nice, but we'll see. We'll see if we'll see if the bounce comes and gets me out, or if I can scale into another one. Right now you're looking at NQ. So I got in right at about here on the tick chart when it was that reading. And it's basically, it's slightly up right now. It's not really bouncing the way that I want it to bounce, but if we bounce up to, well, okay, there it is. If it bounces up to here, I'm probably going to get out, but I would like to see, I would like to have got a little bit bigger than one MNQ contract. So we'll see if it can come in a little bit more. Yeah, I'm using it just for a quick kind of a rubber band trade, right? So if you think of it in terms of a rubber band stretching really far and then you let it go, well, when I think that the market's going to let it go is when we get very, very frothy as far as a tick reading. So now that we finally have the Fed out of the way, I'm looking for like the volatility kind of pick up here, which I can kind of get, you know, into those type of trades and potentially even build into maybe 2, 3, 4 contracts at some points to actually get like a decent move on a fade versus just like my typical like one contract sort of thing. But yeah, right now it doesn't look great. We're underneath the low VWAP. We're underneath pretty much everything right now. So see a little bit stronger of a flush here in the near future seems likely. If you hold down in this area too, on the tick chart, it's likely to get that continuation. So I'll add an MNQ if we can get like a minus 1200, minus 1250 type of reading here. And if we bounce back up to this VWAP, I guess I'm just going to exit it. It's actually kind of just at 5,600 here on MES, on SPX. 5625. I use 1 minute on the tick chart, yeah. So my current thing is at 780, and I think honestly I'm just going to put the pause on it right there for a break-even trade. I'm just not really liking this too much. I'll just hold on to it. It's 1 MNQ. I don't care. That's fine. We'll see what we can do. Maybe I'll get out of it either at that VWAP or if we get back above 0 on the reading. It's just not bouncing yet, at least. All right, well, there it is. All right, well, I'm just gonna kill that one off. That was 20 points. All right. Okay, so now we do still have the bearish momentum. It's kind of breaking down. It's underneath all these VWAPs. So if we get a minus 1,000 reading, say that like breaks this level, I'm not really looking to interested in doing that right out of the gate. I'd be giving it a little bit more time because, you know, if it opens the door to these lows, like I don't want to just start a position here and then try to add into it down here. Plus I didn't really like that bounce there. That took a little bit more time than I liked. So we'll see what this kind of looks like if we get a minus 1,000, minus 1,200 reading again. Some might think, okay, why don't you just short it? It's actually not a bad idea, but also I'm just not interested really in shorting yet because sometimes this market, when this thing rips, like it can rip faces off, and I'm just not like too ready for that yet. I'm more focused on the long perspective. It's just been more of a comfort thing for me. Google long-term entry. I don't know about long-term. Maybe. I mean, I guess, I mean, if you're looking at the weekly chart, I mean, it pulled back into, this, these areas where it was once, prior support, prior resistance. So maybe initial stage for an entry, but if it goes lower, it may at least have some gunpowder left to scale for a longer type trade there. Scooby-Dooby-Doo-bop-bop-ba-doop-ba-doop-bop. Yeah, it's a little pinned right here at 5,600, which is kind of interesting because, I don't know, that's right here. Like, there's not much there. Which tells me, like, if this thing cracks, we're going 55.60. Or a quick pop to 56.15 and or 56.25. There's that minus 1,000 reading there. But like I said, I'm not trying to do that right here, right? That unfortunately missed out on, or where did that? Oh yeah, right here. That's why I missed this move. But I'm just not interested in that type of a break, right? So if I go to the tick chart right now, right, and I look at this, yeah, we're getting extended, but we're also holding down here, and we're kind of breaking this low. So I'm not really excited about that, right? Now, if this was one straight move like this, I'd be more interested, right? Because it gives me something to fade, not something to fade into a consolidation, which, means that I can miss moves. Like I missed this move, right? I missed this move, but I did catch, a 40-point move. I'm fine with that. I'm not trying to catch the entire thing. I'm just trying to pick up pennies consistently. Prawn, it'd have to be a fairly, if I was to get out on the 3%, it would have to go probably around 6 to 10% against me for me to get out. So when I'm fading, the risk is larger than actually the reward. And the reason I'm doing that is because first off, I'm going against the trend, right? So I already know that the reward could be smaller than the risk, right? Because I'm doing it. But the reason why also that the risk is deeper is because I know it can go off further, but there's most likely going to be some sort of a bounce. So I'm going for the quick hit with allowing for more risk on a smaller position. So when I look at that, it's typically a higher hit rate because of that differential. And the only way that I'm going to keep scaling into it, if I actually get 3 scales into it, it'd have to be basically straight down or straight up, right? If I'm shorting it or if I'm going long it. Mostly I do it from the long perspective, but I would have to I would have to not see these consolidations. There you go again. One of those stupid 1,000 readings again, and it picks its head off the ground over here. Did the same thing to me right here. Whatever. You little stinky. You little stinker. The Fed isn't the market's biggest concern. The Fed. Wait, let me think through this question here. I don't quite understand it. Oh, like the more. Well, I don't. I mean, it's not at the moment. I guess not right now. But the market definitely, can move. Depending on what the Fed says. That's for sure. But right now, I guess, market's not really doing much. It's just chopping around. We just came actually right back to this candle. So this candle right over here, that was where the announcement took place, and we were just there, right? So the market hasn't actually really moved. A lot of nice back and forth and a couple little fade trades today. I'm going to delete some of these VWAPs off my screen. It's getting a little too noisy for me. Got to like clean up, shower my NQ chart, rinse it off, some soap and water. I feel disgusted. Oh, it's like it's not moving like it used to on Fed days. Yeah, not right now, to be quite honest. You're right, it's not. But then again, a lot of the times you want to pay close attention because sometimes it's the day after when the market has its time to settle in. We'll take a look. Like let's like what's the bond market doing, right? Let's take a look at yields. We'll take a look at the 10-year. I mean, this thing's down 77 basis points. I mean, that's not huge. TLT's up a little bit. Let's take a look at crude oil. That's a pretty big move in crude oil, down 2%. Like this has been seeing some crazy volatility. And, you know, if oil breaks down here, I think rates go with it. You know, it's hard to think inflation is going to be higher with oil falling. So my thought here is if oil breaks down, okay, we get some relief on inflation, but what happens like in the last quarter of the year, right? Especially if oil starts to pick back up and I don't know, we look at more of we start to hear the word stagflation more frequently. I think there's a lot of different scenarios. So I'm trying my best just to kind of follow price here. Yeah, we'll take a look at dollar. Yeah, thank you. Got the dollar sign. The dollar, yeah, kind of creeping its little head up today. Overall, this thing got hammered this year. I don't think anyone was making a call for this big of a drop that fast in the dollar. The last 4 days, it's been contracting. I guess it's been contracting a little bit more here. A falling dollar could be back to bullish for the markets, by the way. We saw that correlation on a couple of videos ago that the dollar started to negatively correlate with the markets, which is positive because the dollar was falling with the market. So the correlation actually became positive. So there wasn't really a good advantage there. But then recently on the 20-day correlation, the dollar started to become negatively correlated with the markets. So the dollar goes up, it could technically at this time right now be bad for the market. But if the dollar starts to sink back off, it could be potentially more of a positive look. At least right now, that's what the correlation states. We'll take a look at Google again. I didn't get to be able to re-enter anything, so I did take a position for a day trade and then also sold into that for more of a swing trade. I was hoping to see maybe Google take a little bit more of a spill. Maybe it will still. Down to the lower monthly implied move. I mean, it's not really bouncing here. I mean, this was a pretty decent bounce. Comparative to this, it's nothing, but the daily volume weighted average price, that would be a level to watch if you're bullish Google, right? So that could be a level maybe like if you're day trading or swing trading, maybe a quick scalp up to there. And then back to the 2 standard deviation move, kind of in confluence. And then the bigger level there that I'd be watching would be this prior low and this week to date volume weighted average price, wherever that is if we get up there. That would be the more kind of levels of resistance that I'd be watching. The market just ripped in my face right now as I'm stating this. You got to laugh. So did something come out here? Give me a second here. Yeah, the market is absolutely ripping. See what was said. White House CEO chairman says the U.S. has leverage in China dealings. Okay, that's what's happening right now. Look, we get that minus 1,000 reading just like over here.
Make that headline. We are seeing upside in NVIDIA shares, and as such, seeing some upside in US equity futures as well.
Beautiful. That was a move. Careful chasing, but what we do here now is we anchor volume weighted average price to that move and see if price consolidates and breathes it in. 56.55 is in play right now. We'll see if anything's opening up on this. It'll take a second to upload or to load up. And then the original shot was here at 5,700 from early morning. That'd still be insane in my opinion. Some big volume coming in on this. Do not get excited to short it right away. We're getting some pretty frothy readings here on the tick chart, okay? Gosh, that's now 2 times today. We get a minus 1,000 reading. I'm like, I don't like doing it here because it could potentially break. And then both times, right in my face. Wham, wham. That's awesome. Love it. All right, there's that 56.55 tag. That's back at the gamma flip line too. Love it. See what the dollar's doing right now on that news. As we just stated that for the dollar, falling dollar would be potentially bullish. Dollar's still up, kind of holding up here, actually pretty strong. So no reaction yet immediately there. You saying short now? I mean, maybe for a couple of points. That's for sure. I'd be looking at that VWAP down here. If you're short, if you're trading, if you're scalping, right? If you're scalping, pay attention to whatever that news announcement VWAP was right down in these ranges. One contract, yeah, that's totally fine. Or like one mini or one micro. I'm doing micros. I don't got it in me to do a mini. Not yet. Maybe with a much larger account and like longer time frames. So I don't need to sit and stare at it. The news that came out was President Trump to rescind global chip curbs amid AI restrictions, and then also White House CEA Chairman Miron says the U.S. has leverage in China dealings. So two little things came out there. Trump and then something about China. So there was that news VWAP. That's our first reaction from that. So pretty good little move there. So if you did happen to catch that short for the contract, right? That's why I like to anchor these volume weighted average prices on when volume shows up, right? So volume showed up big time here on this tiny time frame. It doesn't mean you can't like break below it, but it's a level to be aware of and actively engage in if it makes sense to. I cannot believe that 2 times now on the -1,000 reading are the only pretty much the only times that I didn't take the trade, and I took the ones right before it, and I got faked out 2 times. Oh, you little punk. And you know what? I'm still not going to change my mind because there's been way too many times that it actually does break down and go further. So this happens and you got to be okay with it. You can't change your plan. You can't change the strategy. Oh, brother. That's so funny. Gotta have JOMO, right? That's what, what does he say? Who says that? The joy of missing out, not fear of missing out, but the joy of missing a trade. God, somebody help me. He's a professional trader. He's been doing it for freaking 30 years. I'm slipping it right now. I know his name. Give me a second here. I'll remember it. He's huge, well known. Somebody help me. Gosh. It doesn't matter, I guess. But he did. I think he coined it. At least I think he did. JOMO. John Carter. I remembered. Before anybody, I think. Dave Ramsey? Not Dave Ramsey. No. Minervini. No, not Minervini. It was, no, not Qualmac. It was John Carter. John Carter. Known for like his $1 million days of trading. JOMO. He says, because when he misses moves all the time, and he's just like, gotta have some joy in missing moves, because the moment you try to take the move, it can go against you big time. So it's okay, it's all right. Hey, Darren, thanks for the $10 super chat. That was incredibly nice. Question was, geez, man, you didn't need to do that. That's a month in the Discord. Appreciate you. My opinion on a bearish wedge forming in the SPY on the daily. Yeah, we'll pull it up. Let's do it. So I don't know if you were able to watch the last video that I did post, because I did kind of talk about. I kind of talked about it, but I'm assuming you're meaning this one right here on the daily, and how it kind of like paraboled like up even further. These lines are getting, rather steep. right? It's an ascending wedge. Yeah, like it's a wedge, bearish wedge. Ascending wedges are typically bearish. Ascending wedge, bearish wedge, whatever. I never care too much about the names of them because as long as you understand like the thought process behind it and why it's important, and all patterns to some extent, just so you all know, all patterns to some extent, they're just highlighting a period of contraction and expansion and contraction. That's all patterns, right? Expansion, contraction. What's that? Bear flag, right? What's this, right? Expansion, boom, contracting, getting tighter at the thing. So it's just that's all they're doing is highlighting periods of that. And what it does is it's not necessarily like you want to start then after that point you want to stack things in the favor, right? Okay, so you have your bullish column. I'll just draw some horns over here, and then you have your bearish column. I'll just draw a B. You'd be like, okay, what's bullish? Well, we're above a rising 20-day. We're fighting back, consolidating, near year-to-date VWAP. So check. What's bearish? The pattern technically with a series of lower highs, although in the shorter term you do have a higher high and a higher low. So it's kind of like check bull, check bear. And then you start stacking them in the favor, and then you're like, oh, okay, well the 200-day moving average, right? The 200-day is actually we're below that and it's starting to flatten out. And then you start stacking them and you're like, well, it's kind of neutral. So the thing here is when it's contracting, you're looking for a period of expansion, right? So it's not necessarily it's not about being right about a breakout higher or actually a breakdown lower. You want to then map out, okay, if then scenarios, if this happens, I'd be more bullish. If that happens, I'd be a little bit more bearish. And that's what we did on the last video. I started kind of saying like, look, I'm bullish above this higher low. Right, I am bullish, but I mean, how do I draw a square? I'm bullish above this higher low because this is the first follow through day over here. However, I'm not really bullish buying new positions here. I'd prefer to see consolidations or pullbacks. Okay, and that's even if we were to pull back, right? People would get freaked out about a pullback down to 530, right? That's that's another 5% decline. People would be freaked out, but really, if it pulls down into these areas and we start to move back up, that would just be another higher low in this process, and potentially breaking through this could be an inverse head and shoulders, could be a bunch of different scenarios. Now, on the flip side of this, what happens if it expands to the upside? Well, I think that at a minimum, you'd want to have a stop down here or trail the 20 to play it back up into around 570 and potentially higher, because you're pinned right now. You're pinned at this year-to-date VWAP, which is a big level, right? Because what this is psychologically telling you right now, and we're here, right? We haven't decided yet. Like this is indecision. This is the contraction, right? This was the expansion, which remember this move down here? Go watch the video.
Seeing the latest market imbalance circulated by traders, that's 1.4 billion to sell, 1.4 billion to sell.
So the thought here is kind of just creating a couple if-then scenarios. So if we do break out higher, where's the levels to watch? Well, I've been saying the year-to-date close, last year's year-to-date close, right? And then also right down to about here. So if we start breaking out further and the market stays above its 5-day moving average, and then on top of that, we're in positive gamma, I'd be looking for a move back to the 200-day and back into this range.
And just making aware,
I think that is the pain trade.
Into that headline via
and that would also break this high over here, which would get a lot more people bullish. The headline, Trump to rescind global chip curbs amid AI restrictions debate. Just looking a bit further into the piece, it does note that the Trump admin plans to rescind Biden-era AI chip curbs. He's talking about the news, the news coming out. So if that was the case, I mean, that's pretty bullish. Now, if I go back out to 2022, this is another thing that we kind of quickly discussed. Is that enough time? Over here, right? Remember going into this bear market. Remember we sunk off, we moved up, we hit this new low. Remember this big rip up, we actually broke this high and we were back above the 200-day moving average here too. And then it was a bear trap. So we have to always be open to the idea that the market can become erratic again very quickly, even if, we see something more bullish happen back above a 200-day and so forth. So we got to just be open to that idea. Now, if I'm just saying like, are you bullish or bearish right now? The answer is always going to be yeah, because time frames differ, right? So on this time frame, I'm rather more neutral. Geez, thanks, Van, thanks for the super chats, everybody. Like, I appreciate that. You don't need to do that. So yeah, on this, all I'm seeing is a pretty bullish consolidation. So my thought what I've been saying here on that last video was I want to see, if I want to start executing into more of a SPY position, I wanted to see it break kind of the lower weekly implied move or right around here to start it off. And then next week, I'd want it to do the lower weekly implied move again. That would be my approach to some kind of sell side activity. And then now in the shorter term, like look at where we are. We're fighting that week to date VWAP again. Right? We got above it on that news. And then now the news is consolidating, whatever that tariff news was or whatever the case was, or semiconductor news. We're battling it. So if we can get above this and actually hold it, that opens the door for this area and then to come back flat on the week and potentially even higher. So I would just create the scenarios. Right now is more neutral, right? We're very neutral right here. Conditions are becoming better in the market. And there's a lot of stocks that have been setting up very nicely in this environment. And those are the ones that I'm focusing more attention. I want to get more exposure into the SPY and the Qs, IWM and all that stuff. But I'm just a lot more hesitant because the setup from just a technical absolute perspective is not quite as nice as some of the other charts that I'm looking at. Yet. So I don't know. Hopefully that answers. I don't like giving terms of certainty because in terms of certainty, what people hear, because people love certainty, they do. But unfortunately, this market, if you want certainty in an environment that's uncertain and will always be uncertain, right? There's no certainty here. In this space, it can just cause problems, and it will cause problems down the road if you crave certainty. So a lot of people typically flock to people that sound very confident, that say, this is going to happen, right? Tom Lee, why is he so big? Because the bottom is in, because of this and this and that, and I know that this and that. But the more important aspect in all of that stuff, and I'm not to just say Tom Lee, like I don't really know Tom Lee all too well, so he might actually do what I'm about to say here. But if anybody's very confident, if they're not giving you saying, hey, I'm confident, but I'm also telling you, hey, if this happens, I'm wrong. And if this happens, I'm right. Right? So if we break above this, I'm bullish into here. Right? That's what I would expect to happen. If we break down, I'm not interested right now until we can start to see those lower weekly moves and maybe have an idea of where to scale in. So always ask somebody who's overconfident, okay, how do you know if you're wrong? And when will that be? Right? So if I say I'm super bullish right here, I'm very confident, and the market drops, makes a new low, but then eventually in 5 years from now is way up here, I'd be like, see, I told you so. Like, what's that going to do for anybody, right? Nothing, in my opinion. Although, I mean, maybe for a long-term investor, that's completely different, right? You got 3 different buckets. You got short-term, medium-term, and long-term. All right, backwardation for SPY. So thanks again for the super chat, and then we'll look at the backwardation for the SPY if it's still in backwardation, or sorry, for VIX futures. Yeah, it is. So we're still in backwardation here for VIX futures, which is also like just not a great sign for the markets, right? You don't want this to be in backwardation, but it's been in backwardation now for quite some time. So it just tells us what? It tells us that we got problems here and now, and we see less in the future. The way that I made the analogy is, think of this in terms of like you about to run a marathon, right? Down here, you have your days till the marathon, right? And this right here is like your level of exhaustion, right? So if the chart looks like this, what is this telling you, right? It's telling you like, hey, you're running the marathon right now. And as time moves forward, right? Well, not days to marathon, but like, I don't know what to label that X, just help me out here. But basically up here, with a very high level of exertion, it's just telling you that, dude, you're in the middle of running this marathon right now, and into the future, you're gonna cross the finish line and you're gonna be done with it, right? You're gonna be done with it, and then the slope is gonna look like this, right? Which means what? It means that you're gonna start training for your marathon again, and you know that in the future you're gonna deal with that exhaustion level again, but you're not worried about it now. You're just in training mode. So what is this telling us? It tells us that we're right here, right now, in the problem. We're in the race, we're running it, we're dealing with the volatility, and in the future it looks a little bit better. I don't know if that hits home with anybody, but that's the only analogy that I can like think of. So that's the one that I stuck with. All right. Hitman, they're not daily right now, but I do have we do have some help at my house now with my son, which means that I can do this a little bit more frequently here. Okay, I'm gonna go back over to the charts here and just see what's going on. So we had that initial announcement, it faded, and now we're back kind of up here. So we're still, this is still positive. We're above the opening range. We hit that 5655, and then who said the short right there? They hit a great short if they managed to hold into that move, or maybe take some off and re-enter in. So great job there. But that 5655 level, killer level there for that move. So congratulations. There you go, Savage. Nice job, man. Nice job. 5625 and 5620, 5625, 5625, 5620. Okay, so that was an earlier kind of day. Now we're floating around kind of where the gamma's kind of congregating at over here. 5610 would be the put wall. So down here, maybe. Okay, so if we flush for some reason, maybe watch 5610. Okay, so if we zoom out, I just want to show people, like, we've had moves today, but do you understand that this right here was your opening range? The first 30 seconds of trade? So if you're not doing well that trading today, like, there was only a couple of moves here to trade, really. And the two of the largest moves right here and right here happen to be right after a very negative tick reading and almost another solid breakdown, so I couldn't enter both of those. It's great. It's great news. Great news. Wonderful. But hey, it is what it is. There's the bell, everybody. Overall, pretty flat day. Pretty flat day. That was fun. Where do we land at? It looks like the SPY closed basically on the week-to-date volume-weighted average price. 5-day moving average is still inclining. Ding, ding. Ding, ding goes the bell. I want to make sure I don't have any open positions on. Kind of toss my screen away here. Oh my gosh. Oh my gosh, I have an open position right now. Holy cow. Oh my goodness. I am so happy that I checked. I have 5 MNQ contracts on right now. I have no idea how this happened. I am not even joking. Oh my goodness. I am so happy that I double checked this. I thought I was done with the day. Oh my goodness, I am exiting now. Holy cow. Oh my gosh, I got to show you guys this. This is hilarious. Wow, I'm lucky. I just consider that. That sucks. Oh my gosh, that sucks so much because on this original move, I guess I had a position and then it faded all the way back down. I don't know what happened there. I promise you, I had no idea. Holy cow. It wasn't 5 MNQ contracts on one. It was 1 MNQ across 5 accounts. Holy moly. I am so happy I checked before I got off stream. Oh my gosh. There's some prop firms that if you hold it till close or whatever, or past a certain time, and you don't close your account out, they close your account. I don't think Top Step is one of them, which happened to be Top Step. Oh my gosh. No, I'm not. It was actually, no, I guess here it was. Look at. Oh my gosh. You guys, okay, I know exactly what happened here. Oh my goodness. Okay, so right over here, this is where we got that first minus 1,000 reading. And I must have took 2 MNQ contracts. I must have accidentally hit the button twice because I closed it and I even said that I closed it. And then over here, I was considering adding another one. I said, no, I'm not going to do that. But I already had one on. And then it ripped up in my face. Oh my goodness. Geez, that could have been real bad. That could have been real bad. 786. That's hilarious. I guess that's how you get big swings, man. Just set it and forget it. But you actually legitimately have to forget it. Holy moly. That's hilarious. I promise you I had no idea that was going on. As I'm sitting here, as this trade went away in my favor, or this trade right here went away in my favor, I'm complaining that I missed it. And I freaking had a position on. That's why I can't trade doing live streams. There's too many errors. That is so funny. Well, that was a nice little gift. That was a nice little gift. Yeah, it was long. It wasn't short. If it was short, I'd probably still be laughing. I'd be like, oh my gosh, that sucks. It was only one MNQ. It was one left. It was one MNQ contract. And it was on 5 accounts though. So it showed 1, but over 5. That's crazy. That's my biggest day in Top Step now because of that stupid mishap. That's crazy. That's ridiculous. Yeah, luckily it was a good move. That's what an auto stop loss is for. Yeah, no, I didn't know I had the position on. I was already out. I thought I must have accidentally hit the button twice. Sometimes that happens. Like if it doesn't load, like I'll hit buy, and then if it doesn't like load on my screen, sometimes, I don't know if you ever trade Trade Evade, but sometimes there's like a little lag and you might click it again, and then I got out, like I didn't realize it, and then I exited fairly quickly, right? If you go back and watch it, I exited fairly quickly after, I think it was 20 points. I was like, cool. And then I went to my other account, and I was like, oh, I'll trade this account if it sets up again. And I'm watching that, and I don't have a position on, and I go back over here, and there's still a contract on. Holy moly. That's too funny. Okay. All right, y'all. I think free beer for everybody. Holy moly. Jeez, my knees. Apex would claw the money back and say it didn't count. You're so right. I guarantee you they would. I'm not actually trading Apex right now. I was, and then I tried to push limits because it's just not my style. So I might try to bring them back, but their rules are it's just too much for me to follow. So I just have a hard time there. So what I was thinking was if I can extract, more money from these firms, maybe I'll try to bring it back into play. But it's just a little too hard for me. Yeah. That's too funny. All right, everybody. Oh, I'll see. I gotta get off. That's too funny. I need to get some air. Holy moly. Omer, thanks for tuning in. Ballistic, Mad, Sam, Mad Hug, Generator, Spook, Nis, everybody over here out on Twitch, and then obviously over here on YouTube. Got a lot of people out here. Varma. Yeah, we'll see how Google takes these next couple of days. I want to just take a quick look at Google because I'm technically, I guess, have a position still. Nice. All right, I'll take it. Whatever. Yeah, good game, Rick, John, Comrade, Varma, Colby, Dorito, Dia. Or sorry, I know I messed that one up. Soli, Jean, or Gene, Stephen, George, Kurt, Zulfi, Lakeside, Wolf, Zombie, KK, Colby, Savage. Good call on the short, by the way. You got more kahunas than I do. Should have been. I'll see y'all. And if I missed your name, apologize. And then thanks again for the super chats. That was really nice. Take a peek at Dash. I'll take a quick peek at Dash. Why not? I'll take a quick peek. What's going on with Dash? Is he doing something after hours? Down 6%. Choppy range, but yeah, earnings came, right? So I guess earnings dropped it. So yeah, I'm not much of a fan of trying to go long on a bearish earnings move. But yeah, if it sets back up, I mean, this isn't the worst looking chart, but I'd prefer to see some strength there. All right, Michael, yeah, see it. Denny, everybody. All right, I got to get off. Make sure that your trades are closed out if you need them to be closed out, that is. Whew.